Well, Martin, is that correct, your name? Did I pronounce it well?
Yeah, fine.
Okay. Well, thank you for your time. I really appreciate it. I know you're a busy guy. And so let's try to have a really fun conversation today. So let's start with the cliche questions. How did you get involved in this business?
Yeah, well, I was originally went to school to study music, classical violin. Um, I didn't end up pursuing a career in that, but I was always interested in computers. Uh, was into programming since high school, and ended up uh, working at a computer store for a while after college, but then getting a job with a software startup and worked for several other software startups over the years, and then one of them went public in the 1990s. Um, and then when my company went public, that made me very interested in the stock market because I owned some stock and I was watching it every day. Um, and after that, I got so interested in the stock market, I decided to leave my job and just focus on trading. In 1990, the end of '97, I did that. Um, and right away, I got interested in systematic trading. Um, so that's pretty much what I've been doing ever since then. Trading systematically, developing trading systems, and building software for that purpose, and then having other people use my software. And now I just recently started to market the software as well.
Okay. So do you consider yourself more like a trader or software developer?
Yes, uh, both. I mean, I've been my what I do for a living is trading. I mean, all of my income for the past 20 something years has come from trading the markets. So I guess in that sense, I'm professionally a trader. But I because I trade systematically, I don't sit in front of the screen all day and make decisions. I don't like to make individual trade decisions at all. So I like to have a system and make sure the system is working correctly and back tested and follow the system. So
Okay.
my computer is the full time trader, and I'm the full time computer operator.
Well, so I read your entire chapter of the new Jack Swagger's book.
Mm-hmm.
Congratulations! I think you guys did a good job. So I'm just curious about something that I read. I'm not sure if you had the opportunity to work or meet Gene Simons.
Yeah, I did meet him a couple of times back in the late '80s and early '90s. Jim Simons was, besides running his hedge fund, he was also running a venture capital business, and he invested in several software startups, and the one I work for happened to be one of them. So he was the largest investor. He owned about 20% of our company, and he was the chairman of the board. So he would show up at our office periodically, maybe two or three times a year for a board meeting, and I met him a couple of times. Although I wasn't on the board or an executive, I was just a software developer. But I did get to meet him a couple of times. I didn't really know who he was. That this was like in the early '90s, '92, '93, something like that. So even he wasn't even as famous as he is now in trading circles at that time.
All
He
right.
was he was certainly famous as a mathematician, but yeah, I didn't really know him.
Not as a quant or trader or.
Yeah, yeah, he was building what he's now famous for at that time, the whole Renaissance Medallion Fund.
So did that experience influence on your models or anything?
Oh, maybe vaguely. I mean, maybe by osmosis, I got something from. But he never discussed his trading models with anybody outside of his own firm. So the venture capital companies he was involved with didn't know much about his trading at all. He kept it all very secret. So, and I didn't know anything about markets or trading at the time. So I didn't have a context to even absorb what he might have said if he even said anything. Um, so
Okay, okay, no, that's good. That's
Basically,
good.
not really.
Well, you know, it's one of these market wizards, and not many people had the opportunity to interact with him or work with him. So I think it's it's a great experience. So we have some slides that we're gonna start. I like to, you know, as much as I love talking about the markets, it's not the same when you have the chart in front of you. We can analyze things.
Mhm.
So let me share the slides. Let me see if you can see right now. So one of the things that I read from your interview with Jack Swagger is a compound return, right? It's a 20%. It's a triple than 5.7 return of the S&P 500. Is that correct?
Uh, yeah, that's my overall returns for this entire period that you see on this chart from when I started trading full time until now. Um, yeah, and as Jack says in the book, it was kind of divided into three parts. The part from 1998 till 2012 was really my best and most consistent. You can see from that chart how that's more of a straight, smooth
Oh,
equity curve there. During that time, I actually averaged 27% a year, and my worst drawdown was only 20%, which I had a few of. After that, I hit a rough patch from about 2013 until 2016, where I had a 30% drawdown, and then had I changed to mean reversion trading and had a very good period, which you can see there around 2014 and early 2015. And then I got overconfident and oversized my positions because that was just working too well, and learned the hard way the hidden tail risk of mean reversion. So that's my 45% drawdown in 2015 into early 2016. After that, I got much more conservative and I started diversifying my strategies more, and I've had smoother results since then. So I'm kind of back on track. I hope to the old consistency I used to have after that rough patch in the middle there.
okay. So you in that period of time, did you use more trend following systems or more mean reversion systems?
Um, I've never used something you would really describe as trend following because I've always been a short term swing trader.
Okay.
I I typically make maybe 1,000 round trip trades every year and hold positions for no more than 5 days. Um, but so those first years from '98 until 2013, I was using swing trading systems that were trading with the trend. So basically buying breakouts and shorting breakdowns. I've always traded both sides, long and short. So at the same time. So you might call it's not really trend following, but it's a with trend approach to swing trading. And then that stopped working for me in 2013, and I changed gears to mean reversion, which is really counter trend swing trading. Um, and Now I do some of both. I run 6 different strategies, and some of them are with trend, and some of them are counter trend. But they're
Okay.
still all in that shorter term time frame.
And the way how you manage the position and sizing with these different strategies, do you have any like a specific way, or you just use the same position and sizing for every single strategy?
It's pretty. I mean, they all use a very simple fixed fraction of equity. So, but depending on the strategy, some use 5%, some use 10%. At other times, I've used other percents like 7 or. But I don't like to go above 10% in one position size. So that's uh, that's what I use. In general, all of my strategies have pretty simple rules. I'm if given that two choice of things that are roughly equal, I always would prefer the simpler one.
Okay, that's another question I have for you. When you were building this, when you were building this model a long time ago, do you use more rules to develop compared to nowadays? You use less rules, is my understanding.
Yeah, I would tend to put more rules in. I really didn't know what I was doing early on, and yeah, I would just keep adding rules, and especially if I was in a drawdown, after a drawdown, I would look for a rule that would have made that drawdown less bad, and then add it to the system, which is a really not a good way to develop trading systems. But it sort of worked anyway. Even though I was kind of doing it wrong, it was working more or less. Um, so so yeah, but now I tend to use fewer rules, less optimizing, to keep each strategy really simple, and then try to find others, excuse me, that are similar to add to the mix.
Okay, okay. Let's move to the next one. So tell us more about what you do in this particular case, what you trade here. Also, so
Yeah, this
your
is
rule.
just
Yeah.
I think when you hear about any trader, it's useful to know a little details about what they even trade. Like I don't trade futures or forex or Bitcoin. I just trade U.S. stocks, regular stocks, not options, common stocks. Um, and
You don't like margins?
right, I and the basic approach is I've always had data for the whole market, good data, and scan, just basically run a scan every day of the whole market for things that fit the universe definition. So uh, I just use price per share greater than 10, average volume greater than 100,000, ATR greater than 1%. That's a newer thing that I've added, but it doesn't really make a huge difference. It just filters out stocks that aren't moving at all. And then yeah, and it's purely mechanical and technical. Like I often, like right now, I think I have some positions open right now, but I can't even remember what they are. I don't know anything about the individual stocks for the most part that I trade. I just want any symbols that pass the rules of my system, and then if there's too many, I have ways to rank them, and
Okay.
that's it.
So you don't take into account the industry. That's what I'm reading here, right?
Yeah, not usually. I mean, there've been a couple of exceptions. Like, for example, I won't hold an overnight short in a biotech stock because they have a unique risk of, you quadrupling overnight or something if they have good research news on their drugs or whatever. So, but other than a few things like that, yeah, I generally don't do a lot of work with the industry level or sectors, or try to have a balance of how many in each industry I have or anything like that.
Okay.
It's pretty much a bottom up approach. I let my daily scans tell me what to trade and just follow that.
So based on what you return and what you have seen from your experience, I'm assuming that you have strong opinions about the efficient market hypothesis.
Um, Not that. I mean, I know what it is. I've heard of it, but I've never been involved in academic finance, so I've never had anyone try to convince me that it exists or that it doesn't exist. So basically, it doesn't really matter to me. It's like it's just kind of a curiosity that apparently there are some people in academia who debate this topic, which has never really made a lot of sense to me.
Yeah, well, there's like the people that believe in that theory and that no one can beat the markets. So your testimony, your experience, your returns that prove that the theory is not 100% accurate.
I
And
suppose so. Yeah. I mean, my father was an economist, so he actually knew what that was. And he used to like to tell me I think it's a classic economics joke of somebody sees two economists are walking down the street and they see a $20 bill on the ground. And one of them says to the other, aren't you going to pick that up? And the other says, no, if it was a real $20 bill, someone else would have already picked it up. That's
No.
like the efficient market hypothesis, right?
Yep. Yep. That's correct. Okay. Let's move to the next slides.
Okay. Yeah. I guess I've sort of covered some of this already. But yeah, I'm 100% systematic trader. In other words, I don't make any individual trade decisions myself, although I certainly make decisions about which systems I'm running and which rules they have. But once that's the case, when the market's open, I'm just doing what the systems say. I like to say my goal as a trader is to make my actual trades match a future backtest. And yeah, I trade in the daily time frame. In other words, I'm using daily bars, and so I do have some intraday entries and exits. For example, with limit orders or stop orders, but it's all based on daily bars. I don't do analysis of intraday data in order to come up with my trading signals. And I combine multiple strategies. I always have long and short. I also try to diversify on momentum versus mean reversion, or which you could also say is with trend versus counter trend in terms of how you enter. And I'm trying to diversify holding period a little more, although I've always had trouble with longer term holding periods. Maybe I just like the action too much. And in fact, my diversity in that direction was to the shorter term. I added a pair of day trading strategies this year. But at some point, I may add a longer term something. That's kind of a goal.
Do you also take into account the commissions when you're building your models? Or?
When I started in the 90s and early 2000s, that was more of a factor. As a broker I was using, I was paying quite a bit more of commissions, but I also realized, if you have a good broker and they can get you good executions. I mean, often saving 2 or 3 cents a share on an entry or exit fill more than makes up for the commission. So that was happening in those days as well. Now, of course, commissions are almost irrelevant. I mean, they're very low. I am actually paying commissions because I trade with Interactive Brokers and use their API. So,
okay.
Interactive Brokers has a commission-free option, but this recent development of commission-free trading is a little bit of an illusion. I mean, if you're not paying a commission, you're paying something else.
Yes.
You're probably paying the spread almost for every trade. So.
It's for more average investor. It's a complicated thing to understand the free commission, and so most people think they're not paying anything, but in reality, yes, they are.
Yeah, I mean, commissions are mostly a factor for someone who's starting out with trading with a small account, and especially in the old days when it was a per trade commission, not per share. Like if you had to pay $10 per trade for a commission and you were trying to trade with a $5,000 account, your commissions would eat up your account pretty quickly if you were trading frequently. It's less of a factor, and if you have a larger account, it's less of a factor. Because commissions have always been somewhat capped by price. So.
Yeah. And how's your Spanish?
Non-existent. I know a tiny bit of French and an even smaller bit of German, and I've never studied Spanish at all, unfortunately. I wish I knew more languages.
I know we discussed a little bit about your experience with a musician from Venezuela. Could you tell more about that?
Oh, sure. Yeah, I play violin still, even though it's not what I do for a living, but I play in an orchestra in Massachusetts where I live. And recently we've had 2 different conductors from Venezuela who were both trained in the El Sistema program. So I've kind of heard a lot about that from them, and they're both excellent musicians. One of them is older than me and was one of the first students in that program, and the other is much younger. There's a famous conductor now from that program, who's the music director of the Los Angeles Philharmonic, named Gustavo Dudamel. And our conductor, Jorge Soto, was best friends with Gustavo during the El Sistema program, and they're still in touch. They were
That's a nice story.
partners in the orchestra. So yeah, that's my my knowledge of your country via musicians.
Hopefully one day I can invite you over there. And you can enjoy the Angel Falls and all the beautiful beaches that we have. Unfortunately, right now it's not possible, but you know, I think things can change. Like the train can change. The markets are changing every day, correct?
Sure, we can hope for mean reversion in the Venezuelan situation.
That's very, I hope. So let me ask you this. It's really interesting. When you started, you were more discretional, and then later on you became more mechanical. Is that how you describe it?
When I first started in 1997, I opened my first brokerage account while I was still working full time, and I just dabbled in trading here and there, totally discretionary, not even with a plan, just enough to convince myself that was never going to work, and that I needed something systematic. But I didn't know about fully systematic trading or automation or anything. But yeah, I found this guy who was writing a column for TheStreet.com in the mid '90s, and he had a trading method that he used. It involved some discretion, but it also was, he had a pretty simple set of rules that he followed. In fact, the exits were basically, you pick your entries and you enter at the open, and then you put a 5% target and a 7% stop. Whichever one gets hit first, that's your exit. So the exits were completely mechanical. But yeah, it was implemented by picking up the phone and calling the broker every morning and saying, I want to buy all of these stocks at the open, and then put that bracket target stop exit order on once I get filled, and that's it. So our trading was implemented by one phone call a day.
Okay.
And some research before that. And I would enter all the trades into a spreadsheet and then start calculating stats for them. And then that made me curious to see if I could test, well, what would the stats have been if we tried different exit rules? So that's when I first got some data and started trying to test that and writing some code to test that. And then that led to me wanting to also try different entry rules, or even to codify the entry rules we were using, which were discretionary at the time, but they were discretionary, but had a system behind them. So that evolved, and by the start of 2000 is when I was fully mechanical for the first time, and then I have been ever since.
Okay. So when how important is for you right now optimization? How much time do you put on optimization?
My approach to optimization, my strategies don't tend to have a lot of parameters. So I'm not doing a kind of a regular optimization process where I always want to retest the parameters I use and know which ones are the best. It's more like I'll just try different things. I'll get an idea, like, or what if I add a rule or take away a rule, or I might try a few different parameter values off the top of my head. But what I really prefer is when they show me that I should stay with what I already use. I'll try to see if other things would have been significantly better, and if so, I'll try to understand why. But if a strategy only works with a few parameters and has poor results with every other parameter, then I don't even want to use it. That's more of a problem with someone like Kevin Davey, who was your prior guest, who is developing systems for one market, one symbol, one futures contract. you really have to be extra careful with optimization in that case. And he has a very good walk forward methodology that he uses. In my case, I'm never doing anything at the single symbol level. I mean, all of my strategies, I have a universe of maybe 2,000 stocks on any given day, and I'm finding all the ones that fit my setup, and then ranking them by something and taking the top ranked ones. So if you put parameters in the process at that level, uh, they have less of an effect. It's really, you have to work harder to over optimize. Although I still manage to do it, but you do. It's less of a danger than it is when you're working with a single market. Um,
Okay.
so that's why it's not that important a part of my process. But yeah, I'll do, like, for example, say I have a profit target of 10%. I might run an optimization from 5 to 15 percent just to see how much difference that makes. And I like it best when it doesn't make very much difference. Um, and it's similar with, I might run through a range of stops and see how they work. And there might be one or two other parameters. Like with mean reversion, there's some kind of measure of how oversold it was before you enter. So I might optimize that parameter, and but I won't just run an optimization and take the best value. I'll just study the results and see what they tell me, and then use my own judgment of what I want to do with that information.
Okay. Okay. So I'm just curious about something. Why you think Jack picked the title of your chapter, "Don't Quit Your Day Job"? What do you think?
Because when he was here in this room when he interviewed me, because it was before COVID, and he it almost came up like a joke. I don't even remember the context, but I mentioned to him that if I ever wrote a book, I would probably call it "Don't Quit Your Day Job." Um, and then he decided that was pretty funny and it was a good title for the chapter. That Yeah, I mean, the reason I said that is because of that difficult period I had in 2015 when, I had that big drawdown, and that coincided with a time of high expenses in my family. So it really,
Okay.
wiped out a big chunk of our assets, more than 45%, when you factor in account withdrawals along with trading losses. And it put me into a little bit of a crisis where I was thinking, oh, I really wish I hadn't quit my day job 15 years ago, because now it's hard to get back into a career that you abandoned 15 years ago.
Yeah, and also I'm assuming the psychology behind that your system has to work or needs to work, and you create more pressure and probably putting more things on, and that's one of the things I have discussed with previous guests is, I don't know, say that happened to you, but at the beginning, did you blow up any account? Did you have that experience?
No, not at all. I mean, I was unusual in that I never had the experience of trying to take a small account and turn it into a big account, uh, like many traders do. Uh, and those, when you hear, oh, I blew up 3 accounts, they're usually talking about smallish accounts, 5,000, 10,000, whatever. Um, I mean, I got a lot of money from our IPO, and I was basically like, how am I going to invest my money? And I ended up concluding that I wanted to invest it by learning how to trade short-term swing trading, because partly because I felt like that was the least risky approach rather than buy and hold. Um, and and so I started out quite conservatively. I was trading very small positions at first, and then gradually increased. So yeah, I never blew out. I mean, I did have when I was dabbling in discretionary trading in 1997. Um, I ended up losing about 50,000 that year. So for some people that would be blowing out an account, but it was, luckily for me, a pretty small fraction of the capital that I had available. So although it was still very shocking to lose that much money, and it made me realize I had to keep my eyes open.
Okay.
And
Well, I mean,
careful.
I think it's that happened to me because the thing when you're starting this in this business, you think too much the potential gains rather than the potential risks that you taking every time. So how's your experience with risk management? Has something has changed during the whole career? So you had like a different thoughts at the beginning and now you have more like a precise way to approach the risk management?
It's more like I had very good instincts from the beginning of how to manage my risk. Of one was to always include both long and short in my trading, uh, and to keep position sizes pretty small, and stick to my rules. Always, when something is in a trade is a loss, you take the loss and so on. So I never got greedy or anything, except for the one time when, and it wasn't so much getting greedy. I just got the mean reversion strategy when I first developed it and introduced it seemed to work so well. And I was kicking myself like, oh, why didn't I discover this earlier? This is a much better way to trade than I had been trading. And it had a much higher winning percentage, and even the losses weren't very large, and it just had that nice smooth curve. So then I let, and I had experienced a worse drawdown than I had before in 2013, and I was hoping to make that up quickly. So I let myself uh, increase my position size, like trade as if I had more money in my account than I really did. In other words, add a little leverage, and that amplified the drawdown that came afterwards when I discovered the hard way that with mean reversion strategies, you tend to have serial correlation. You can get a few big losers in a row, and it's pretty surprising how quickly your account balance can go down when that happens. And they do tend to cluster. Losses tend to cluster in those strategies. So now
Okay.
I keep it smaller.
Yes,
Um,
yes, that's a good advice. What is your advice to any young trader who's starting this on this journey? Well, what do you tell them?
um, I I haven't had to advise a lot of young. I mean, there's been quite a few people who I've met here and there, who are interested in a systematic approach, and I've helped them understand how to think about trading systems and how to do back testing and that sort of thing. But that's more of a nuts and bolts thing than an advice. Um, but um, I mean, my first question for someone is to make sure they understand why they even want to trade in the first place. I mean, is it, and I would still say don't quit your day job. I mean, there's in my case, I mean, I made a conscious decision. I wanted to have more time with my family. I wanted to have more time with violin, which I had been neglecting, and I saw it as an opportunity and it's kind of an experiment. And I figured I could always go back to my career if it didn't work after. I figured I would know within 6 months to a year if it was going to work or not, and it would be not a very risky thing to do. Uh, the thing that turned out to be risky is that it worked right away and kept working for 15 years and then didn't work. So that I did not expect. Um, I still, for my own situation, I made the right choice for me because I traded. Uh, I got freedom of time and so on in exchange rather than making more money. Maybe I could have made more money if I had stayed in the software business and traded on the side. I'll never know, um, and it doesn't really matter.
Okay.
But because it is what it is. But yeah, for young people, I mean, for someone who's convinced that they want to be a trader, my number one advice is you need a method, you need rules. Nobody succeeds in trading with just following their pure intuition. You have to have rules, uh, whatever kind they are. Maybe they're mostly discretionary rules, maybe they're mostly systematic rules, but and in order to have rules, you have to have some way to test your rules to know if they're working. Some people test them just by live trading, which is fine as long as you keep it small enough. Some people get data and test them with historical data, which is a little more work, but you can do that whether it's visually or with software. Um, so that's my main advice. Just test.
Test, and retest.
Yeah, right.
The demo accounts, and then you can go live. And also, do you have, or you still have, a mentor?
I never had anyone who I called a mentor. Really, I mean, the first guy who I Gary B. Smith, who I started writing to him after I was reading his column in thestreet.com in the mid 90s. Because I was trying to learn his method from his articles, and I had questions of things that weren't clear from what he wrote, and he was very nice, and we corresponded a lot, and we ended up working together as trading partners. So I kind of thought of him as a mentor, but I wasn't looking for a mentor or like approach him and say, "Will you mentor me?" or something like that. It just kind of happened on its own like that. Uh, I didn't really know what I was doing, but that's just what ended up happening. And yeah, other than that, no, I haven't really sought out any kind of a mentor. I tend to be the kind of guy who figures things out on my own, and then I have a lot of people who I collaborate with, friends and people I met in different forums, and now people I meet because they're using my software, and so I enjoy those kind of collaborative relationships.
So you have mentees? The
Yeah,
opposite.
something like, yeah, some of them. I mean, I prefer to think of everybody as colleagues and
Okay, okay.
collaborators, but I think there are some people who think of me as a mentor, perhaps. But I don't have really a formal mentorship arrangement. Uh,
Okay. And so, what motivates you every day to do your work? Is anything that when like what's your routine? You wake up, how do you get motivated? Because one of the things when you're trading is like you are just yourself,
yeah,
no one else, correct? So how you psychological deal with that?
yeah. I actually did find it quite difficult to do it as just myself. That's why early on, I'm very grateful that I met Gary and we formed a kind of a partnership. So, because in that first year of '98, after the year when I was just dabbling on my own, the first year when I was approaching it seriously, yeah, we did have a daily routine of either getting on the phone or getting on instant messenger, um, which was because they didn't have cell phones or text messages back then, but we had instant messaging or just sending emails back and forth. But I think, yeah, we would get on some kind of a chat thing every day and discuss. We both knew what the process was that we were using. So he would come up with his list of setups and I would come up with mine, and then we would compare notes and agree on which ones were the best and maybe debate a few of them or whatever. And then we would both take the same trades. So that helped it not feel like it helped with motivation to have somebody else. He was counting on me and I was counting on him. So that was very useful. And I've had a couple of other trading partners over time who I've worked with like that. Um, and yeah, now and but yeah, but my day, but a big benefit of mechanical trading is that the daily psychology is not as critical. Like all I have to do, I mean, my daily process really takes me 5 minutes. I have to get up and remember to download the yesterday's data from my data service, and remember to run a scan, and remember to press the start button on my automation software. Oh, and log into Interactive Brokers. Yeah, those four things. So it doesn't take that much motivation to do those four steps.
But that took you
Although
20 plus years to
unless
get to this level, right?
yeah, and there's an exception. I mean, if you just had a bad day, it can take a little motivation to press the start button and have faith that things will be okay the next day.
So
Uh, but it's possible. There's been a couple of days when I couldn't press it and left money on the table as a result.
Okay. So
But for the most part, I do fine with it. And finally, to answer your question, finish your question about motivation. Yep. Now that I have a lot of people using my software and interacting with them around that, I'm motivated by that every day as well. Going in my forum and seeing what questions I have and so on.
Okay. So in a certain way, you like to teach other people how to use this software, or?
I mean, I don't really think of myself as a teacher. I don't really know how to structure education very well, but I like to answer questions. And, when someone has a question, I like to answer it. When someone comes to me with a specific problem, I like to help solve it. It's sort of like that. But I kind of need the other person to drive. They need to tell me what they need. I can't figure out what they need.
Okay. And reminds everyone, what's your website again?
Oh, mhptrading.com.
Okay. And they can find all the information about the software, about everything there, right?
Right. And my email is mhp@mhptrading.com or help@mhptrading.com. So people can email me. Twitter, Marsten, that's 10 like 10.
All right, Martins, I really appreciate your time. I really had fun with this conversation. So many things that I didn't know about you, even though that I read the entire chapter. That's the beauty of the conversation too, right? So you can,
for sure,
you can go deeper or not depending on the situation. Exactly. So any final thoughts for all the people that are started trading or they are in the trading business?
I don't know. Good luck. May the force be with you.
That's a good one. All right.